Okay, we're with us here on Trading Hour, and we are in conversation with the birthday boy. Raam Agrawal is with us. Ramdev, happy birthday again for those who are joining us. So we were talking about autos. You sort of weighed in on stocks like Maruti, and I think the broad thrust of your opinion is that you can't trade in and out of some of these names, right? These are compounders, more structural stories, so you got to stay with them.
You cannot trade in and out of the equity portfolio also, let me tell you. I mean, you can make whatever changes you want to make, but basically, if you have a crore and you want to earn 15-16%, whatever is the index return, you want to earn index return, you cannot be in and out, because who knows this last 5 days will be 10%, because they'll never repeat. Like I was feeling a little nervous, bearish in last interview, but I didn't do anything with the portfolio. So then
you were fully invested then. You're
fully invested then now. So, but this move, because I know it is going to surprise us. And whenever I am bearish, then obviously market has to go up. At least that's been my experience.
Right.
And a lot of people, they think
I hope it is not the reverse as well. That when you're bullish, the market has to go down. I hope.
No, yeah, that can also happen. But what I'm saying is that you cannot predict the short-term movements of the market.
Right.
I mean, if you're long-term bearish about this country's future, businesses underlying, entrepreneurs underlying, government underlying, then you better stay in some kind of bond, or maybe you have a foreign portfolio. You are bullish on American businesses. Like Buffett is bullish on American business forever. Buy American stuff, usme kya hai?
Okay. What about banks, Ramdev? Because you know this whole corporate bank theme. Yes Bank is up 48% year to date. Axis, ICICI either at fresh highs or close to 52-week highs. So is the rally done? Should someone have bought it 3 to 6 months before, or can someone get into it now?
See, this corporate bank is a little cyclical kind of a thought process, that because corporate lending went through its own stress point, and now they are saying that NPA cycle is turning. So let's pile on to the corporate banks. But basically, banking is a huge opportunity in India because of the structural change which is happening in the banking system. In '95, it was 100% state-owned banks. All Sarkari banks were dominating the scene. Dominating what? They were the Maibab. From there, the private sector banks started. You see, of course, a lot of licenses were given, and of that, few only survived. But the ones who survived and prospered, you see what has happened. You could buy HDFC Bank for 1,000 crores in '96 with all eyes open. No IPO, SHIPO. I mean, in listed space for 40 bucks, I remember, you could buy any quantity of shares. And today, it is 6.5 lakh crores. That 1,000 crore bank is 6.5 lakh crores. Of course, some dilutions here and there. So it is up how many times? It's almost 600 times, 500 times. This is ex-dividend. Come dividend, maybe it is up 1,000 times. So that's the kind of power we are talking about. It's a shift from a PSU to private, and still 2/3 are. Still 1/3 has shifted. 2/3 are still yet to be shifted. And still we are giving birth to brand new, so-called, could be HDFC Bank types.
RBL has been a perennial
there are so many of them. Government is giving licenses. I mean, there is IDFC, there is a AU Bank, there is a Bandhan Bank, there is a whole lot of banks. And we don't know which one will be the next one. But the opportunity is very compounded and very... very rarely you get an opportunity in a stock market where you can see growth for a very long time. Who will be able to seize that opportunity? That is a different game. But per se, is there an opportunity which is that visible? In a compounded way, you can say 15% for the banking, 20% for the private sector. On a 20% industry growth rate, I mean, you will definitely find small ones which will grow 25-30%. Now, how many sectors or how many sectors per se you can have for say, you can say that 25% compounded growth will be there for 10 years. There is nothing. I don't come across anything.
Okay, so that's a pretty solid view coming in on banking. Anything else you'd like to leave us with? Where are you seeing relative comfort in terms of valuations? You often talk about margin of safety. Where are you finding that? Not stocks, but generally sectors, pockets.
I mean, see, in a lot of places the earnings are not to the potential, you know, and because of that you can get some of the companies, at very low prices, or you should put your bets on. Say like, as I said, autos. Autos are suffering from now lower earnings because of the growth banks and lower P multiple because of that. So you are hit from both sides. And whenever it recovers both of them. Earnings will come back and P multiple also come back. So, like that, then your capex boom. It has not happened for last 10 years. Will it happen in next 5-7 years? See, one other thing which is important in investing is that growth should not be behind. Growth should be ahead. Now, many times you buy T+1, say the growth has started last year and you are buying after 12 months. You pay heavy price. You pay reasonably high price because markets are smart. They'll discount next 3-4 years, and unless you have an edge in understanding that beyond 3 or 4 years, still growth left. Otherwise, your return will be very mediocre. Many times, right now an opportunity is that, okay, this if the capex comes back after a year or two, these companies are going to do very well. Despite the fact that right now valuations are very low, very reasonable, because there is no growth on the ground. So you start buying in them ahead of time. Maybe you're 6 months away, 1 year away, 2 years away, and it could be just a value trap. The growth never comes back. तो देखिए ऐसा तो नहीं हो सकता है.
Right.
India cannot go from $2.5 trillion to $5 trillion without having a capex.
Capex boom.
Absolutely. That point is taken, and Ramdev, we're going to let you go on that note. But I wish you again a very happy birthday and a very successful year as well as going forward. Thanks very much for joining in and speaking with us. But let's get talking about the technicals of the market now. We have Mitesh Thakkar joining in to discuss what the technicals look like. Mitesh, over to you. Well, it's turning out to be a day where we are seeing some amount of I think it's come off actually for the Nifty at this point in time, but nonetheless, a little bit of momentum for the mid caps. What would your recommendation be?
Yeah, so I think, the market basically does look like range bound 11,550 to about 11,750, and we bought yesterday and we kind of booked profits today. I don't think we'll see a trended or a directional move for the next few days to come by. The intraday indicators do suggest consolidation. So try to buy it close to 11,550, keep a 30-40 point kind of stop loss, and that should be your trading strategy going forward. Having said that, I think on the stock side, we're trading with a mixed bias. I have a mix of buy and sell calls. Currently, I have 2 buy calls. Cipla is a buy with a stop at 525 for targets of 550, and Castrol, if it breaks 169.5, 170, then take a long with the stop at 165 for targets of 178.
Okay, all right. Well, we have a Twitter query for you, Mitesh, in just a second. So let's get to that. Shankar wants to know whether Dish TV shares are a good buy with a short-term view. What would you suggest?
Dish, I think, already has, if you see the last few weeks and months of price history, I think it's rallied from 20 odd levels to 40 odd levels. Not the best, levels to take longs. I think the stock will do a range of about 41.5 to about 35. So 35 should be your entry point. Keep a stop loss, and I think there's a good chance of you getting that lower end of the range. And try to keep a 1.5 point kind of stop loss and try to exit around 40, 42 levels on the upside.
Okay. All right, Mitesh, we're going to let you go on that note. Thanks very much for joining in and giving us all of those strategies. Well, for the markets, it's come off a little bit, like I mentioned. So 11,617 currently for the Nifty, just about higher by around 19 to 20 odd points. We have the mid-cap index, which is managing to mildly outperform. Bank Nifty has actually given up gains from the day's high. So it's just about flattened out currently for the Bank Nifty. SBI, for example, is down around 1.4%. And a couple of other stocks such as ICICI Bank is down around 0.5%. Take a break. But up next, we'll discuss what's taking place in the commodity space. Manisha Gupta will join in.